Hello guys, so in this video, we will discuss about PAS 29, reporting in hyperinflationary economy. So this is the reference that we should use when accounting for companies that are situated in hyperinflationary economies, and that is your PAS 29 hyperinflation. So what are the learning objectives for this? First, we have to know the characteristic that may indicate hyperinflationary economy. Second, to understand constant peso accounting. Third, to distinguish between monetary items and non-monetary items. And fourth, to know the procedures for restating historical financial statements in terms of current price level. So our first agenda is to determine the different characteristics that indicates that an economy is experiencing hyperinflation. So since we are all familiar with the word inflation, I would think that all of us already know what's the meaning of it. So when we say inflation, there's an increase of price of the goods that we usually buy. And when we say hyperinflation, grabe na jud ang iyang pagtaas sa prices sa mga baligya. So next level na ning hyperinflation. So what are the so-called characteristics of hyperinflation? We have 5 characteristics. We have letter A. The general population prefer to keep its wealth in non-monetary assets or in a relatively stable foreign currency. So it means that the people prefer to have their wealth in a non-monetary assets or those assets with fluctuating prices or in terms of foreign stable currency. Since their local currency is already experiencing hyperinflation, where the prices are really high in terms of that currency, they much prefer to measure their wealth in terms of another currency. Letter B. The general population regards monetary amounts not in terms of local currency, but in terms of a relatively stable foreign currency. For example, you will search the internet. There are certain countries where their national currency is the US dollar, even if they are not under the USA, but they still use the US dollar to quote prices in that currency because the US dollar is relatively more stable than their local currency. Letter C. Sales and purchases on credit takes place at prices that compensate for the expected loss of purchasing power during the credit period, even if the period is short. So, di ba, pag sale and purchases on credit, deferred man na siya. So, if it is deferred, it just means that you will have to wait. You will have to wait for the payment. So, if you will have to wait for the payment, the tendency is, since it is a hyperinflationary economy, the value that you will receive is low. So, in order to compensate for such expected loss, there will be an increase in price. Letter D. Interest rate, wages, and prices are linked to a price index. So this price index is set by the central bank sa usa ka country because the index is the one who indicates the overall prices of the goods. So if the interest rates, wages, and other prices are linked in a price index, it means that it is possible that the economy is already experiencing hyperinflation. And in letter A, the cumulative rate over 3 years is approaching or exceeds 100%. So what is this 100%? This is the inflation rate of that country. So if we notice in over 3 years, it is approaching or it has already exceeded 100%. It means that it is experiencing hyperinflation. Okay, so the question is, are these only the characteristic that we should look out for in order for us to assess if that economy is experiencing hyperinflation? The answer is no, because according to PAS 29, we are also using professional judgment. We will be using the so-called professional judgment in order for us to assess if an economy is experiencing an hyperinflation. All right. So next, financial reporting in hyperinflationary economy. So what if ang usa ka company is situated in a country that is experiencing hyperinflation? How do they manage their financial reporting? So according to PAS 29, paragraph 8, provides that the financial statements of an entity that reports in the currency of a hyperinflationary economy, whether they are based on historical cost approach or current cost approach, shall be stated in terms of the current measuring unit at the end of the reporting period. So we have the so-called restatement process for the financial reporting in hyperinflationary economy. And let's also remember the comparative figures for the prior periods should be restated into the same current measuring unit. So, the prior period and the current period financial statements should be restated to the current measuring unit of the reporting period. So next, how do we accomplish the restatement process? Restatement is accomplished by means of constant peso accounting. So constant peso accounting is also known as purchasing power or price level accounting. So when we say constant peso accounting, it means the restatement of conventional or historical financial statements in terms of the current purchasing power of the peso through the use of index number. So what is index number? So index number is known as the general price index, GPI. So when we say general price index, it shows the overall changes in the prices of the goods and services. Next, why do we have to restate the financial statement of the companies in a hyperinflationary economy? The answer is the objective of the constant peso accounting is to report elements of the financial statements in terms of pesos that have the same purchasing power. So, under this constant peso accounting, we classify the accounts in, and it is represented into two classifications, monetary and non-monetary. So, let's have my partner, Ms. Maquiso, to continue the discussion.
So what is monetary items? Monetary items are money held and assets and liabilities to be received or paid in fixed or determinable amount of money. So ang key essential feature dyan sa monetary items is it has the right to receive cash and obligation to pay a determinable or fixed amount of money. So, ang examples nato diyan na is cash and cash equivalents, notes and loans received, bonds payable, financial amortized cost, finance lease receivable, accounts, notes, and loans payable. So, makita na ang example lang is, example nga include lang kay is financial amortized cost. Wala tong FA, FVPL o FA, FVOCI. That's because ang kato sila is measured at fair value. So that's why wala sila na include sa monetary item because ang fair value is not a fixed amount. Next slide please. So ang non-monetary items cannot be classified as monetary. So non-monetary siya because their peso amounts reported in financial statements differ from the amounts that are ultimately receivable. Otong FAFVPL securities and financial asset at I, PPE, intangible assets, inventories, and advances to suppliers. Next slide. So what items are restated? Only non-monetary items are restated when preparing financial statements, so non-monetary items lang. And because monetary items are stated anymore, because they are automatically stated in terms of the net purchasing power of the peso. So ang formula for a statement is cost times index number at the end of the reporting period, the index number on acquisition date. So unsa man ni index number? Ang giingon sa akong partner ganina nga, this is the general price index. So this is the index statement. The changes in the prices of the goods and services. So ang general price index ni siya mo increase o mo decrease. ma-increase gani siya, it is called inflation. Ma-decrease gani siya, deflation. So, an it is an increase in the general price index means that the purchasing power of money has decreased. And deflation, decrease in the general price index means that the purchasing power of money has increased. So, next is the gain or loss on purchasing power. Purchasing power means that the goods or services that money can buy. So, kining purchasing power, applicable lang ni siya for monetary items such as monetary asset o monetary liabilities. By inflation or deflation. So, in the period of inflation daw, mag-incur of purchasing power loss on monetary assets and mag-realize of purchasing power gain on monetary liabilities. Ngano man eh. So example di ani is sa in the period of inflation daw under sa monetary assets. Example is if mag-deposit ka og money. So di ba naman ay interest. Example, if ang interest ibutang nga 0.25%. But since inflation man, ning increase ang market rate of interest, so nahimo siyang 2%. So naa ka purchasing power loss because instead nga 2% interest ang imuhang ma-receive sa imong money, 0.25% na lang siya. Kay purchasing power loss. But kaibahan po siya sa purchase o sa monetary liabilities because na kay ma-realize power gain. Tungod na siya, example, kay if magbaro kag money, ang interest niya dapat nimong bayaran for example is 8%. And inflation man siya. So ang market rate of interest mo increase. So for example, mahimo siyang 10%. So na kay realize na purchasing power gain because kanang instead niya 10% ang imuhang bayaran na interest, 8% na. So for the deflation, balik po siya sa on na kay ma-realize na purchasing power gain on monetary assets and na kay purchasing power loss on monetary liabilities. Same sa ako example ganina, baliktad lang siya. Pag mag pag mag-deposit kag money, pag under sa deflation, for example, 0.25 di ba imong interest ato, then deflation man siya so nahimo siya point. So na ay market rate interest, mo decrease ang market rate interest, mahimo siyang 0.10% na lang. So naa kay purchasing power gain ato because instead nga 0.10% na lang, 0.25% ang imuhang interest niyo ma-receive sa imuhang deposit. And sa makay ma-incur na purchasing power loss sa monetary liabilities because in the period of deflation, ang imuhang gibaro na money na 8% nga interest sa deflation mo gamay siya ang iyahang interest. So may for example may siya nga 5%. So naa kay purchasing power loss because imbes na 5% na lang ang imuhang mabayaran na interest, 8% siya. 8% siya. So motong naa kay purchasing power loss. Next slide please. So procedures for restatement. Mano siyang procedures for restatement. First is to classify all the items in the financial statements into monetary and non-monetary. And do not restate the restate only the non-monetary items. Natay duha nga i-consider sa non-monetary items. Non-monetary items state items stated at fair value and NRV. So, if non-monetary item stated at cost siya, dapat siya nimo nga i-restate because historical cost man ni siya and lahi ni siya sa current price index nga mo na kinahanglan siya i-restate. For the non-monetary items stated at fair value and NRV, dili na siya kinahanglan because at fair value naman siya, so measure na siya at current price index. Pero naapod siya exception because if the fair value or NRV was determined at a date other than the end of the period, it will be restated from the date it was determined. Next slide. So next is restate all the items in the income statement by applying the change in the GPI from the dates when the items of income and expenses were recognized. So for practical purposes, ang gamiton is the average index. Next is to compute for the general purchasing power gain or loss, and this will be reported in profit or loss. Next is the restated amount of assets will be reduced when it exceeds the recoverable amount. Next is any revaluation surplus recognized previously will be eliminated. Right? Retained earnings will be the balancing figure in the restated financial statements. And lastly, when comparative financial statements are prepared, all items here are expressed in terms of the index number of the year.
So that would be all. Thank you so much for listening. I hope nga naamoy na learn and good luck sa inyong short assessment.